Hi, I'm Lee Elliott, Global Head of Occupier Research at Knight Frank. Today I'm joined by Amanda Lim, Partner in our Flexible Offices team, and James Fairweather, Partner in our London Tenant Representation team, to talk about the changing dynamic of London's occupational markets. So I guess there are three sort of specific themes that are running through the occupational market which we probably want to cover here today. Firstly, real estate as a strategic device, something that really matters for business. Secondly, changes in the operating environment, the business dynamic and how that percolates through into the real estate markets. And then finally, that all-important interrelationship between people and property. Let's start with the first. I mean, I've been talking for some time now in lots of Knight Frank's research about real estate being a strategic device, something that really matters to business in driving forward particular business agendas. And that's been very much borne out by our latest Your Space research. 400 global occupiers, 90% of whom say that real estate matters to them. It supports them in all kinds of areas such as brand, such as talent retention, cost control, all kinds of strategic issues that are facing business. I just wondered how that sort of plays out in the market. So James, how's that strategic intent really playing out in the requirements that are coming to you from clients?
So we've really seen a real flight to quality from our clients wanting to get the best in class new space. In 2008, 2012, we saw an average between 8 and 12% of tenants wanting new space and taking new space. We've actually seen now in 2019, 21% took new space, and in 2020, we actually saw 28% of taking new space. So real flight to quality. We've also seen tenants wanting fitted out space, space that they can move into. Real change in that the year before, only 40% of Knight Frank occupiers took space. Last year, 60% of our inquiries and acquisitions were for fitted out space, so real change. Certainly, we acted for Bank Lumi in acquiring space in the city, and the reason they took it was a cost saving, a risk, de-risking it with COVID and everything, and also time management saving. They didn't have to deal with all the fit out, so real savings for clients. We also saw that there was very much a move towards well buildings, buildings that have the qualities sort of. In the last 6 months, I've acquired 5 spaces, all with roof terraces. Clients really moving to that. The Bloom in Farringdon, it's interesting that one of their big floors has a big terrace, and rather than giving it all out to that top floor tenant, they're actually going to split it and give it to other tenants lower down, because there's actually real value in keeping that for the rest of the tenants. We're seeing air conditioning, people wanting proper clear air conditioning and open windows. And the other thing is the amenities. It's really good to have not just the bicycle racks and the showers downstairs, but when we acquired space in Verde for GDST and Carwell, very much the thought was, there was a really good gym downstairs. That was really attractive to the staff, and also on the top floor there's a really good event space terrace where they could have yoga and things like that.
I mean, I think that's really interesting because, one of the things that we've been hearing a lot about over the last year is this sort of death of the office narrative, that, the fact is we don't need as much office space. But I've seen a very clear trend from occupiers to move towards better quality space that provides amenity, supports people's well-being, and is really attractive to people. I used the expression before of talent magnets, places that actually really pull people in and give them the amenity to really support their well-being, but also their productivity. And it's clear that's working through in the market. Amanda, from the flex market's been a real story in the London market over the last 5 years or so. Are you seeing that sort of same strategic intent playing through in the requirements coming through across your desk, as it were?
Yeah, absolutely. I think as clients are putting innovation, collaboration and staff development at the forefront of their real estate strategy, flexible office space can now be used as a supporting pillar for companies who are planning the real estate long-term strategy across the next 5 years. As a temporary solution or long-term solution, whichever works best for them, to sort of include all the amenity space that James is talking about, but not have to manage the space or pay for the space initially. Well, they do pay in some ways, but not pay for take vast amount of space whilst their employees are working out what and how and when they want to go back to the office. So it supports the gradual return to work policies that most companies are going to have to work through in 2021.
And the other thing about the flex market that always fascinates me is the overarching narrative in the market is that it's sort of for SMEs. It's for a particular type of company. You know, those companies that are not grown up enough, if you like, for conventional space. But it seems to me that there's a lot of demand, either unmet or slowly being fulfilled from the larger corporates. So you seeing that play through, and has that particularly ramped up in light of COVID and sort of the uncertainty that COVID has brought?
Yeah. It definitely has. We helped a global insurance company last summer relook at their real estate in London. They own an arm of sort of different insurance companies, and we're now helping them to move them into flexible office space, just because the client isn't quite ready to take a long-term lease right now. Because nobody really knows how much space to take or when to take it for. When would people want to come back to work full time in the office, or are people going to do it, 50-50 from working from home? So I think to assist with the planning, flexible office space is definitely useful for firms. It also helps them save money over a year period, and also gives them the flexibility to scale up or down, or even work from multi-locations.
I mean, I think what's fascinating about the occupational market right now is that you've got a lot of uncertainty, but you've still got those really dominant agenda items: talent, how do you attract it, how do you retain it, but also cost optimization, which is going to play through in the market for some time now. And it's clear that both of those are playing out in both the conventional and the flex side of life. So I guess we sort of touched upon our second dynamic, which is around how the operating environment for businesses are changing. And there's no doubt that the last 12 months or so has been pretty challenging. You've had a global workplace experiment where working from home has come to the fore. Lots of drive towards building operational resilience. Companies really then thinking about balance sheet and financial resilience. Lots of uncertainty, lots of volatility. And if we look at history, whenever you come out of a global crisis, there's always that uncertainty in the operating environment for some time to come. So, we've got the good news of vaccines and all of that stuff that's starting to roll out, which gives us a light at the end of the tunnel. But I think from a business perspective, we're likely to see a little bit of volatility for some time. And that's challenging. That's challenging from a real estate perspective when traditionally commitments are quite long term. So Amanda, that sort of uncertain business operating environment that we almost become accustomed to over the last 12 months or so, how does that sort of support and drive the flex market?
Well, I think the flex market will support that for companies. It will allow companies to help their employees adapt and change the way they work. Because I don't think, even for myself, I don't know how I would like to work for the next year, whether I want to go back to the office 5 days a week or 4 days a week. I know I definitely want to go back to the office, but who knows? And I think that's what everyone's working through at the moment, and it would give companies the option to give their employees choice. And I think choice is going to be the big ticket item for 2021. Choice of how you work, where you work, who you work with, choice of background, whether you want to work quietly in a phone booth or whether you want to work with your colleagues around a table like that and come up with ideas. So definitely, I think flexible office space can provide that. So it doesn't matter if you are a 5-person company or 500. The vast amount of amenity space you have in a flexible office building would give you those opportunities to have choice.
I mean, of course, choice has been a watchword over recent months, and the outcome of choice is that you get multiple outcomes. So that it's really difficult for businesses to plan both space requirements, where their headcount is, all of those sort of traditional things that are perhaps been a little bit easier to control in the old way of working. I think are up for grabs, and that plays to the flex market. I'm just interested on the flip side. I mean, we've been talking a lot about occupiers and occupiers' requirements and how they're changing. How's the flex market itself, in terms of the operators and the providers, actually adjusting their offer to support that demand and really capture that demand?
Yeah, I think what's helped is over the years there's been so many new entrants into the flexible office market. If we talk about the WeWork boom that's happened over the last few years. That's changed the way people have looked at flexible office space. That's also changed the offering in many different ways. You know, month-to-month rolling contracts have then become common. And right now, because of the background climate that we're working with, we have things like day passes that are being offered out, you know, amongst all your standard operators. You also have things such as flexible lounge passes. So that gives employers the option to give their staff access to multi-site locations. So if you lived in the West End, you could probably just pop into one of the West End buildings and not have to commute on the tube, which is not desired right now by a lot of staff. And I think operators, you know, and landlords have started getting involved in making sure that they work with their tenants, big or small, to find the right space that's the most suitable to their current needs. And I think that is how it would play out, and how operators would start being central to what their customer wants and offering that.
I mean, I think that's that issue around platform and flexibility across a platform, I think, is going to be one of the big trends of 2021. I mean, we tend to get transfixed. We think about flexibility in the context of an asset. Lease flexibility, a single building, encouraging flexibility within the context of a single building. But I think that next evolution is definitely platform. I think it's going to be really exciting to watch that play out. And it will really capture the attention of occupiers that are thinking about agility and all of those issues. I mean, James, from beyond flexibility, clearly the changeable operating environment for business, that uncertainty, that volatility, growth opportunity followed by, you know, perhaps diminishing markets, all of those sort of dynamics playing out every day. How's that changing sort of occupational demand in the conventional market?
Well, other than flex and having breaks, as I've already said, the flight to quality, tenants are definitely looking for good space, great space, new space. But the other big thing coming through now is ESG, very much. Clients of mine 3-4 years ago, Impact's one of the big environmental green investors, really got my eye going on it, because they were really looking at the buildings very clearly to see how green they were. And they themselves have really grown over the last few years in terms of assets under management, because the shareholders, the investors, they're all wanting, and particularly staff as well, they're pushing the businesses, all want to invest in it. It's really, really good. We're also seeing a lot of collaboration spaces needed. People, less cellularization, more collaboration. And then the other thing that we're seeing is very much training. A lot more people are needing to be upskilled. Staff need to be upskilled with the new tech and artificial intelligence and things like that are coming in. So we are seeing a lot of training. One client, we're acquiring space in the West End for 7,500, and they're actually going to make within it an academy where they're going to have lecture theatres and breakout areas.
I mean, I think those agenda items are really fascinating. I've been talking for some time about the need for businesses to get real with their upskilling and reskilling requirements within their people. You know, ultimately businesses have been fighting a war for talent. It's been extremely expensive, and actually that talent isn't always there. And with some of the technologies that are starting to come in business, such as AI, such as you know, virtual reality, all of these sort of newfangled technologies, I sound incredibly old, but all of those sort of technologies that's coming to bear are really challenging people and existing staff members. So that training and education piece, I think, is going to be the next wave of amenity that we're going to see in office buildings. And I was also struck by your point about ESG, because I think it's really interesting that I think we have seen a real groundswell around the ESG agenda, but particularly from the investor side of life. Interestingly, when I mentioned our Your Space survey earlier, you know, only about half of our survey respondents had less than 10% of their global portfolios in green accredited buildings. Now, if that ESG agenda is really going to move forward from the occupational side, that's going to be a real frontier on which occupiers move forward. And I think as a consequence, you know, we're likely to see those accredited buildings coming up the agenda in terms of searches and options for occupiers. So some really fascinating change in dynamics, I think, going on in the business world, which will shape the real estate decision.
Exactly, Lee. An example of that would be BP. They recently sold their building in St James's, moved their office to Cargo in Canary Wharf. and also worked with the office group to take, a 50,000 square foot building to help with the transformation of the business. They weren't exactly sure how to create that space for the employees. So they worked with a provider that knew how to do it and been doing it for a long time to create that business environment that they really wanted. They called it the collaboration factory or something along those lines, to give that space to the employees to thrive in.
Yeah, I mean, I think the transformation that BP are going through in particular, and it's not exclusive to BP, but as is a real bellwether for the market, that you're going to see real change in the way that they think about occupancy, they think about their portfolio and its configuration, and they also think about the workplace and what they're trying to achieve from their more formal parts of their workplace. And clearly that plays to both the conventional side of the market, but also to flexible as well. The last theme is about people and property, and I always get a little frustrated, but around discussions about the occupier, because it all seems to be very much about the real estate, and we forget about the people that are actually occupying the space. I've said for a long time that real estate is moving from just being a simple container in which to put people, and actually something that can actually support and enhance the way that people operate, productivity, well-being, all those themes that we've kind of touched upon, and that sort of discussion point really comes through to cost as well, because if you think about a business, probably about 15% of the cost base is property, but actually 60% plus of the cost base is people. And we seem to get a little bit transfixed in the real estate world of about rents and operating costs and occupational costs, which in reality are actually small fry relative to the people costs. And we certainly saw coming out of the global financial crisis that lots of occupiers took decisions that were spreadsheet driven, frankly, and actually created really poor working environments that impacted them longer term and impacted their staff longer term. So I was just wondering, with this latest sort of coming out of the COVID situation, which has really hit people extremely hard and tragically in many regards, how's the staff and the talent agenda for business really going to influence the real estate decision-making processes of occupiers over the next couple of years? James, what about the conventional market?
Well, on the conventional side, clients are definitely looking at public transport and how they get their staff into work. They're concerned about that. We have seen with Crossrail that a lot more occupiers are looking to take that step closer to Crossrail. They are concerned about people just want to have one journey in and then walk to work. They don't want to go on tube lines and things like that. So that's very important. The other thing they're thinking about is safety. Just making sure that the building is safe for them in terms of making sure that everything's clean, touchless technology comes in and things like that. Working from home in the spring and summer last year was very much in its honeymoon phase, and people like Jess Staley from Barclays and JP Morgan were all heralding that people won't be going back into the office. This has very much changed. At the virtual economic summit last week, Jess Staley turned around and said it's just not working. People need to be in, they need to collaborate. Mary Erdos of JP Morgan just said it is fraying, it just isn't working. So they're acknowledging that it needs to change and get people back in and collaborate.
I think one of the things that's interesting about the talent piece, and I mentioned the cost of talent versus the cost of real estate, and we are clearly going into an uncertain environment where we're going to need to balance cost considerations. How do occupiers do that? How do they get their cake and eat it, if you like? How do they have the very best talent and support that best talent with the best buildings, but also respect the sort of the financial pressures that they may be under?
Yeah, they really want to retain that talent, but also attract it. That's the important thing. But the cost, we are benefiting at the moment from slightly reduced rents. Rent frees have definitely gone out there. And what we saw after the GFC is very much the finance directors were there with their spreadsheets trying to reduce the costs a lot. It's changed in terms of the FD is still there, but they're looking at the cost, and costs can be good. It can transform a business, and they're looking at how they can spend their money. Their talent, the talent officers, the chief talent officer is now what he's called, is actually in the C-suite making decisions with the chief exec and with the FD to make those decisions about how the business should move forward. A client of mine, we're just acquiring space, which we wouldn't have done a year ago, you know, they've made the decision to consolidate, move on, but they've worked out it's going to cost them more, but they want to attract and keep their staff and make it a really good collaborative space rather than being in 3 separate offices, bring them all into one, and that's really sort of important for them.
Yeah, I mean, I think this is all about the transition from seeing real estate as a cost and rather seeing it as an investment and looking at the value proposition of real estate and making a stronger relationship between having good real estate and more productive staff or better, best-in-class staff, rather than sort of compromising environments and ended up with a bigger problem, which is certainly what we saw in the GFC. Now, Amanda, you've spoken during this conversation about choice. You've spoken about the importance of people, agility, flexibility. And as I've mentioned, we've seen this drive towards more hybrid forms of working, combining people combining home with you know, a more conventional office, if I can call it that. How do you see that sort of drive towards hybrid working playing out, particularly in respect of the flexible market itself?
I think it's important to remember there isn't a one-size-fits-all solution at the moment. And, you know, as I said before, a lot of companies are still trying to figure out what is that size that fits them, you know, what's the style of working that will fit them and their employees moving forward. So flexible office space gives them that flexibility, you know, as it's called.
The Ronseal factor, that's what it says on the tin.
That's what it says on the tin. It gives them the flexibility to scale at any point during their contract, gives them the flexibility to add on space. It also gives them that community feel, and I think community was such a big word used in the flexible office space boom over the last few years. But your water cooler chats, you know, the people you do meet, we have to remember you cannot build a business culture or, you know, initiate new relationships over Zoom. You can, but it's completely different to what you can do in person. And, you know, referrals across businesses, referrals across startups. London's seen the record number of startups built up over the last few years. Now, how does that work for those businesses if they cannot sit and work with like-minded companies like themselves?
Yeah, I mean, I think that's a really fascinating point. That's sort of I think economists have called it sort of social capital, and the fact that when we went through that first phase of the sort of great global workplace experiment, we were all expending the social capital that we generated by contacting people and being engaged with people in the office environment. But at some time you need to replenish that. And whilst you can do that remotely and in a digital space, increasingly we're going to need to do that at some time at least in a more physical setting. So I think that is one of the sort of the great sort of supporting arguments around the rebirth of the office, if I can call it that. It sounds a bit sensational. I don't think the office has actually gone anywhere, but you know, rethinking the office, rethinking the purpose, the form and function of the office, which I think is going to be really critical.
Yeah, I think the office space, you know, to people has changed a lot over the last year. Like James said earlier, at the start of the first lockdown, you know, last summer, it was, you know, everyone enjoyed working from home. You could go sit in your garden, you could play with your kids. Right now, I think, you know, people are having to juggle with many things. Loneliness, having to juggle homeschooling and entertaining your children whilst working. So there are various things that will keep changing the office space climate, as I would say, or the rebirth of it, over the next year.
I mean, that point about connected loneliness, there's a great expression, connected loneliness. You know, we're all more connected than ever before through digital. But actually we've got higher levels of loneliness and depression and mental health challenges than ever before, simply because, you know, we don't have that physical interaction with people in a workplace setting. And I think that is going to be really critical, as indeed, James, your mention of sort of educational drive and development opportunities. I mean, one of the things I speak to a lot of professional service firm leaders, and they're saying, look, you know, we can work remotely. We've managed to do it. We've managed to dust off the laptops and get people working. But the thing that they've really struggled with is that ability to sort of sit alongside more experienced people and learn the ropes of their particular industry. And I think that's going to be a real drive again back towards the office. So some really interesting themes and dynamics emerging in the market. You know, we've come out of that great global workplace experiment. Everything's up for grabs. It feels like a brave new world. So perhaps with that in mind, a closing question for you both, a future gazing question if you like. You got your crystal ball. How do you see the London market developing throughout the remainder of 2021? Amanda?
I do think, especially in the flexible office market, and I'm not saying this because I'm biased, it would absolutely thrive. Previously I said it's not a one size fits all, but I do think occupiers will end up partnering with their providers, whether it's a landlord providing a fitted space or, your traditional serviced office provider or your hybrid solution of managed office space. Mm-hmm. That variety would all mean that they have to work with their occupiers alongside us to create a solution that works for them in that interim. Because again, it's not forever. It's an interim solution whilst people work out what actually truly works best for the business.
And James, what about you? 2021, how does it look?
Last November and December, we were very busy with the big private equity and hedge funds seem to be growing. But it is mixed. We do have, particularly the sub 5,000, some clients closing their offices. But these people are looking to come over. Q1, Q2, I can see things really, really picking up. The problem is, what size do people want is one of the big questions. And I think core and flex will come into it. Big buildings that can offer a serviced office will really help because they'll be able to flex up. I've got a client in St James's. They're in a serviced office and they're so glad they did because some years they have 20 extra in the serviced office, or sometimes we're trying for 70 now. They're really growing and having that flex in the building. But one thing I would leave you with is that the Brookfield chief exec, Bruce Flatt, said the other day that you look to the Far East and Australia and Dubai, people are now back in the office and shopping. People are social. They will want to get back into the office.
Yeah, so I'd agree with both those sentences. I think 2021 is a year when we steadily see occupational demand returning. We see occupiers moving away from strategizing and into action. We start to get them thinking about workplace transformation, portfolio transformation, and that's got to be good for the market. And the other thing, of course, is that not every sector is on its knees. We've got some really flourishing sectors, big tech, life sciences, both of which have a real role to play in the London market that I think are going to really build on the experiences of the last 18 months and really start to flourish and create occupational demand. So Amanda, James, thanks very much for your insights, some really valuable insights there from the coalface. We hope you enjoyed the conversation and of course do check out the London Report for even more.